Locker getting crushed today despite beating earnings estimates and better than expected same-store sales. The retailer saying it expects global supply chain constraints to persist throughout this quarter. The stock is currently down a little over 11%. Joining us now is Foot Locker Chairman and CEO Dick Johnson. Dick, welcome back to the show. It's good to have you. This was a good quarter on sales, on margins.
It was a great quarter, Sarah.
You raised guidance, but I guess some of the concerns come around the guidance raise and the presumed slower growth rate and worries about the supply chain. What's your reaction to the market reaction to what you put out today?
Well, you know, I sell sneakers. I don't try to predict what the market's going to do, Sarah, and we had a great quarter. Our team did a fantastic job of navigating through the supply chain challenges. You know, we've been really battling supply chain challenges for almost a year now. So this is not new news, and I'm not sure what the reaction is. You know, we worked really hard during the third quarter to get our inventory position to start the fourth quarter, which we did. We were down 7% at the 7.5% at the end of the second quarter, you know, up slightly at the beginning of the fourth quarter now. So we feel like we're really well positioned for the holiday. You know, I made a comment about not having the visibility that we'd like to have, but that's just the nature that it's been. And as we see the 80 ships docked offshore in Long Beach and LA, we know that the flow through the port is being constrained, and we don't have the visibility that we'd like, but we certainly have the inventory that we believe will get us started in the quarter, and we know that there's more goods on the way. So again, I'm not sure about the reaction of the market, and again, we feel really good about the quarter we just went through, and certainly how we're set up for the next quarter.
Just if I could ask you to expand on the inventory point. So you do expect to have the product on the shelves in time for the holidays?
Well, again, we start with the inventory up from where it was at the end of the second quarter. So we've preloaded a little bit of the inventory. We've got inventory flowing. You know, the production impact of South Vietnam will likely be a little bit later, but we're a multi-branded retailer. So we work with multiple brands and have inventory flowing through a lot of different ports in a lot of different ways. So yeah, I feel confident that we will have products available for our customers. We certainly did in the third quarter. They proved that even if their number one choice wasn't available, they are right now going to the next best available product, and they're satisfied and coming back in droves, quite honestly.
How big of a factor is Nike here? Because for you, it's still, I think, more than 60% of your sales. They warned about supply chain in a big way last quarter for this current quarter. So I'm wondering is it an outsized pain point for you, the fact that you're so reliant on Nike, or is it just out across the board?
Well, Nike's certainly our number one partner and our biggest partner, and we work closely with them as we do with all of our vendor partners to flow inventory in. So clearly they have a little more visibility than we have because they see it at the factory level. But as we work with them as partners, we see the flow and we understand what's coming in from them. But we've also seen, as we talked about on the call today, the majority of our top vendors all had gains in the second or the third quarter, So the customer's finding a lot of exciting product in the stores, and as a multi-branded retailer, we feel great about that position.
What's going on with market share? One of the analysts today, Sam Poser, who we have on a lot, Williams now, warned that you were losing market share to Dick's and Hibbett Sports. Is that what's happening?
Well, we concentrate very high on the premium marquee products, Sarah, and certainly as we look at the total marketplace with price point changes, et cetera, the numbers would look like we are, in fact, losing a couple ticks of market share here and there. But as our team ramps up and finds other alternative products, again, the customers, as they voted in the third quarter, like what they see in our buying in our stores. Our traffic is up, our app downloads are up. All of the indicators are that the customer engagement with our team and our sites and our stores has never been higher.
Well, Dick, we certainly appreciate you taking the time to come on today to explain the case. Dick Johnson, CEO of Foot Locker.